Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the first medium time frame bearish scenario, where we're looking for a WXY to the downside in a double zigzag, meaning we have an ABC zigzag in W, looking for a 3-wave corrective structure in X, before then a zigzag in wave Y to the downside, where the most common target for wave Y is between the 1 and the 1.236, which is now between 24.4k and 22.8k. Now in this scenario, in a double zigzag, you want to see this trend line broken, which clearly happened, but the problem for this bearish scenario is that now candles are closing above the 0.5 Fibonacci taken from the high to the low of W, and for a wave X in a double zigzag, preferably the 0.7 is not touched. You're going to close candles below the 0.7 and move towards the downside, as a double zigzag is most commonly a sharp corrective structure and not a sideways corrective structure. So the fact that now price is ranging around the 786 really lowers the probabilities for this bearish scenario on the medium time frame. Now, if we look at the subdegree count of this wave X, then the only one we can think of over here, with this being the low, is an ABC expanding flat, where wave C is then by itself an expanding diagonal, which is very, very rare. You have then a 1, 2, 3, 4, 5. Most common target for wave C is between the two 1.618, where price is now moving above. We had the key level here with a couple of highs, but on the 4 hour we closed a candle above the triple top now. A rare target is the 2.618, but you can see that the 2.618 is above this high, and again, by all means, an expanding diagonal in an ABC is very rare indeed, lowering the probabilities of this scenario. If we go to the second bearish scenario, then we are looking at a zigzag, an ABC to the downside, where wave B has the common targets of the 886 all the way to the 0.382. So that's a very wide area, meaning that for this wave B in a zigzag, the 886 is still a potential target, which is sitting at 31.1k. After wave B, you then expect another impulse to the downside in 5 waves to get the double bottom over here and also fill the wick that Bybit made to 23.6k. If we then look at the subdegree count of this wave B, we have to look at a WXY, again a double zigzag structure. You don't really have any other options here, because you can't have this as a first wave, second wave, third wave. And the reason is that in an ABC, this is a running flat, which is very, very rare. And in a WXY, then Y and W are both a zigzag, which is not allowed. So that is why over here I have a zigzag in wave W, zigzag in wave X, which is very common. And then you're going to be looking for another zigzag in wave Y. But as you can also see, wave Y at the moment looks pretty much like a straight line towards the upside, instead of a proper zigzag with a proper retracement, lowering the probabilities for this scenario as well. Now at the moment we are in the most common target area for a wave Y, between the 1 and the 1.236, which is between 30.2k and 31.1k. If we look at the bullish scenario, then we have to look at this flat scenario here, where we then have an ABC running flat, as wave C did not take the low of wave A. A running flat is incredibly rare, especially also on the higher time frames, but in this scenario, this would be the bullish count, because this is your low, and you're going to be looking for price to move towards the upside. If we then zoom in to the move towards the upside, we're thinking about a double 1-2 scenario, where we have a 1-2 in green, 1-2 in blue, and this is the beginning of your wave 3 to the upside, where usually a minimum target for wave 3 is the 1.618, which in blue over here, as you can see, has now been touched very nicely indeed. In this particular scenario, you eventually expect a wave 4 in blue to the downside, a bit of a bigger range, which should be similar to what you see over here, or longer in time, which clearly we didn't have yet. So eventually, after blue 3 is in, you're going to be looking for blue wave 4, where the common targets for blue wave 4 are between the 0.236, 382 and 05, taken from the low to the high of 3 whenever 3 is ending. And then you want to see continuation to the upside. In the bearish scenario, you want to see price stopping here and continuing to the downside, reaching the invalidation at 28.6k. If price would move down and hits this level, that would not be good for the bulls. Now in this scenario, this second wave 1 and the second wave 2 in blue are a lower degree Elliott wave count. And what is interesting here is that the second wave 1 is bigger in price or higher in price than the first wave 1, and the second wave 2 is longer in time than the first wave 2. Even though these are lower degree Elliott wave counts, 1 is longer in price and 2 is longer in price and time, which is not common. You don't really see that very often, and you did at least have some bullish CVDs at the lows, higher low in price but lower low on the CVD. If we then look at some additional confluences around this range, then price touched the volume profile twice. This is a volume profile of this range over here. Value area high hit once, value area high hit twice. You can imagine that if price would come down, you're going to fill the range to the downside, potentially reaching 22k or 23k with the point of control. But of course, it is strong support and we hit it twice now, moving towards the upside. If we look at the support resistance areas, they've been respected incredibly well, moving down and all the way again around, up and down the support resistance areas. And now we are basically at the final support resistance areas, which was resistance here as well, and could act as resistance again. So for the bulls, it's important to move above the support resistance area, sitting between 30.8k and 31.1k. If we look at the volume profile of the more local range, which is this range over here, then we entered the value area low. Now, as mentioned back in when we were ranging here, it's now retesting the value area low. And if you retest this and it can move towards the upside, point of control is the next target, value area high is the next target, with the value area high at 31.3k. But really, it's so close to the high, you better just take the high. I mean, why not, right? Secondly, you also see a key level on the chart and the white box, and this has to do with the inefficiency that we have over here. If I jump to the 4 hour, you can see that a candle closed inside the white box, meaning a candle now closed inside this inefficiency, which increases the probabilities you're going to fill the inefficiency, the gap to the upside, meaning price will then move towards the upside to 31.055, as you can see on my chart, and then we have to wait and see what price does if it fills that gap. Now finally, some other resistances that we had right over here. Speed fan from the high to the low, golden pocket, nice resistance, moved above the golden pocket, retest, moved above the 786, retest, and now moves towards that 886 area. On the 12 hour, we didn't yet close a candle above the 886, which would be important for the bulls. We did have over here a bit of an area of resistance where price is, as you can see right now as we speak. So an important area for price on the chart. But if we look at the probabilities, then on the medium time frame, the only reason I wrote neutral at the moment is because a flat on a medium time frame, a running flat I should say, where wave C does not take the low of wave A, is incredibly rare. But if we look at the low time frame, the local scenarios over here, then the bearish scenarios become difficult to count, right? You have the bearish flat, but then an expanding flat in wave C, which is very rare by itself. And you also have the low time frame double zigzag. We are currently in the wave Y, but wave Y at the moment doesn't count as a nice double zigzag unless this is your 1, 2, 3, 4, 5, and then over here range in B, and then another 1, 2, 3, 4, 5. But it doesn't look nice at the moment, right? So on the low time frame, the probabilities from an Elliott wave point of view are higher for the bullish scenario until weakness is shown. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.